I feel sorry for, a lot of young people who've never really seen a bear market. I mean, if you got into this business after 2008, all you know is buy the dip.
But you said, get my investors out with a decent profit, which implies that you would dare, commit the cardinal Bitcoin sin, that sarcasm, of one-day selling.
If you did that same math today, gold would have to be at $90,000 an ounce.
Bitcoiners love to point out that Bitcoin is for everyone. It can save the global financial system, that it's superior savings technology, and that everyone should own it. But few people do a better job of laying out all of the problems that exist and the reasons that we actually need Bitcoin than Lawrence Lepard. Larry is a huge part of the Bitcoin community, a sound money advocate, and has been investing for over 40 years. When he speaks, you should listen. Now's your chance to do that.
Let's go.
Larry, I think my most memorable moment from Bitcoin Nashville was the awkward time right after Trump's speech. I was in a suit. I went outside. There was a guy out there with some Solana side, and I jokingly opened my shirt to take a picture with him because he was topless, and there you were. I look up and I'm like, here's a very serious person, Larry, and the one moment I let go.
Well, you are serious, and I just thought it was fabulous because you're ripped and you got a six-pack, and that in and of itself is always impressive in this country, given that so much of the country is out of shape and sadly overweight, right?
You're a CrossFitter. I did it for years. Now I just kind of do a old man hybrid, but I always see your videos up there.
Yeah, well, I just show up. I'm not ripped, but I'm consistent. So
showing up and being consistent is the best I think you could pretty much ask for in this world.
Yeah.
It's like, Bitcoiners and dollar cost averaging, right? You just show up and you be consistent.
It's the same idea. It's compounding. It's time in the market, not timing the market, right? You want to be there all the time when it's going the right direction.
So I don't know that I've ever heard your full Bitcoin story. If you can give us the TLDR.
Oh yeah, well, everyone else has heard it a lot, but I'll repeat it quickly. So I'm sound money guy forever. Back I'm still, a lot of people take shots at, I'm still a dinosaur with gold and silver, kind of where I came from. But you got to remember, before 2008, that was your only choice, right? And so I was an Austrian economist, and nobody even knew what that was. And thanks to SAFE, now a lot of you guys all do. And Bitcoin got introduced. I was introduced to it by the Ron Paul Forum guys, and I should have been buying it at $1 or $2, but I wasn't really paying attention. I'll tell you why. I was looking at all the, I remember all the other ones. I mean, the eCash and Hashcash, and I don't know, there's several other iterations of the Liberty Dollar and of state-free money that have been tried. And of course, none of them had worked. They didn't have all the technical pieces, and so they had a double spend problem in many cases. And so I just kind of ignored it until it got to be about $100. And I was like, whoa, hang on a second, maybe there's something here. And so I started filling out the forms for Mt. Gox and wasn't really paying attention. Eventually, and this was, was well above 100. I think it shot up to close to 1,000. And then Mt. Gox failed, fortunately, before I sent them money. And at the time, Coinbase had just come public and or opened up for their business. They weren't a public company yet, but they were a trading, exchange. And that was when I first got in. So I started buying coins there. Not a lot. My fear was always the technology. Being a computer and technology investor prior to that, most of my career was in the venture business, investing in, starting off with, disk drives and memory back in the 1980s, all the way up to, the internet and through the internet. I just realized that, computers are not necessarily stable. So how do you have a form of money when you got the risk of the computer going blue screen? And, it was because I hadn't taken the time to understand what a blockchain was and a halving and, all the stuff that we all know and take for granted today. I didn't, hashing, et cetera. I didn't understand any of that, SHA-256, et cetera. So it took me a long time to get comfortable with that, and going through the fork wars, the forking and then the block size wars helped as well. And of course, now here we are 840 or 50,000 blocks later. And, I've now gotten very comfortable. The technical risk has been pretty well beaten out of the thing, but that was kind of what held me back. So I still, while I was doing all of that and buying coins along the way, I mean, I bought a bunch of coins into 2017 and that run up in Thanksgiving, thought it was going to 100. I was like, oh my God, this is fantastic. And then, of course, it backed off big time. And I bought some more on the dip. But, I was still managing a gold and silver fund, gold and silver mining company fund, because, that was my traditional business. I'd been, kind of a stock picker. So, that's slowly but surely attriting away, but still there. I'm still doing it and focused hard on it. Want to get all my investors out with a good profit, and I think we will, because I think that both of these assets are going to move. I just think Bitcoin's going to move further and faster. So they're both forms of sound money. The gold is the old world analog, and the Bitcoin is the new world digital. And Bitcoin's got the digital adoption curve going for it, and as Saylor and we all point out, it's $1 trillion market cap and a 400 plus trillion dollar asset, bucket of people who make investments. And so it's just not going to take much for some of those people to start realizing that this is a better form of, whether you want to call it an investment or money or whatever, it's better than the alternatives. And so, we're going to much higher prices in my view. I'm sure you agree. So
Yeah,
does it kind of cover it where how I got here?
it does. And the idea that you just sort of shared, I think Bitcoin versus the others, the Paul Tudor Jones fastest horse in the race, right? Which was
That's
a
exactly
statement
what
that
it is. I love that comment by him. I think he nailed it, right? Yeah.
crypto investors in the United States face some major challenges. One of them is that there's almost no way to get exposure to the asset class inside of your traditional investment vehicles. The other thing is the taxes. They are absolutely atrocious. What if I told you there was a way to solve both of these problems? Well, there is, and it's with a self-directed IRA from iTrust Capital. Guys, not only can you open a new self-directed IRA and fund it with the limits each year, but you can actually convert over from your 401k, your Roth IRA, any other IRA that you already have, and you can do that tax-free, just transferring over the balance, and then you can go to cash, buy as much Bitcoin as you want, and not pay taxes when you sell it. You absolutely have to try this if you are in the United States. Use the link down below. It's bit.ly/itrust-scott. That's bit.ly/itrust-SCOTT. You have to try this now. And I think that somewhat sparked one of the previous runs. But I want to focus on something that you just said, because it's interesting. A lot of people may qualify you or say you're Bitcoin maxi, right? The people have terms for all of this. But you said, get my investors out with a decent profit, which implies that you would dare, commit the cardinal Bitcoin sin, that's sarcasm, of one day selling.
Right. Well, when I was referring to that, I was actually referring to the gold and silver fund that I still manage. I was not referring to the Bitcoin bucket that I have. I mean, I honestly think Bitcoin is a multi-generational asset, and from time to time, I mean, obviously when I retire, Bitcoin doesn't pay a yield. I may need to sell, 1 or 2% of my Bitcoin every year to cover my costs. But no, I'm a very long-term hodler with respect to Bitcoin. I think with respect to gold and silver mining properties, I mean, I think that, there's several more puffs in the cigar, but over time, the monetary premium in gold and silver is going to go down, and Bitcoin is going to continue to go up. So, over time, I'm favoring, one versus the other. So that was really what I was talking about.
Does that monetary premium in gold and silver go away over time because of Bitcoin?
Yeah, oh yeah, very much so. Yeah, very much so. I mean, and trust me, I mean, when I say over time, I mean, I may be talking 10, 20, 30, 40 years. I mean, this is not tomorrow, right? There are 8 billion people on the planet, most of whom haven't heard of Bitcoin or aren't focused on Bitcoin. And yet most of whom also understand that gold is real money. And and so if you look at Asia as an example, India and China, I mean, citizens there, they're citizens there that have no clue what Bitcoin is, but they buy gold and silver all the time. And so it's going to take time for the change to take place, but it will take place, in my opinion, because the characteristics of Bitcoin are superior. And it's Safe's point that you want to hold the soundest money out there, right?
Yeah, it's interesting because there's never even been mainstream adoption of gold as an investable asset, right? Before Bitcoiners, the gold bugs.
Well, not in our
Right.
lifetimes. I mean,
Yeah.
there was a time when it was the case. There was a time when it was
Of
the
course.
only and the best investable asset. I mean, JP Morgan, gold is money, everything else is credit. But you're right. Since 71, gold has been, hugely demonetized. I mean, I always marvel, and I'm writing a book, and it's the chart is in this book. It shows that, if, in 71, we were kind of on the gold standard. It was an exchange standard. It wasn't perfect, but one could take our money supply, one could divide it by the ounces of gold we had, the 261 million ounces, and one would come up close to $35 an ounce, which was kind of the reference price from Bretton Woods. If you did that same math today, gold would have to be at $90,000 an ounce. So, what does that tell you? It tells you that we printed a whole lot of money. And I always laugh when Bitcoiners say, well, there's so much monetary premium in gold and it's going to get taken away. And I'm kind of like, well, yes and no. I mean, it's been pretty well, the monetary premium has been pretty well beat out of it because, there aren't many people who really regard gold as money anymore. I mean, it's jewelry for most people. So.
Right. So it begs the question, we have the narrative of Bitcoin as digital gold or a store of value, which personally, actually, I don't love, but
Really?
I think it is a prevailing narrative. But if
Why don't you
most
like it?
people,
I'm just curious. What's wrong with it?
the implication that Bitcoin is digital gold
Yeah.
leads most people to say, why doesn't it trade like gold? And I think there's a huge differentiation between price and characteristics. I think it has the characteristics to be a superior version of gold, but I think it muddles the waters because people look at the price and think that they should be correlated or that it should trade like gold. And I believe that it's very minimizing to Bitcoin to compare it to any other asset class as far as correlation, because I think that I think the best pitch for Bitcoin is that Bitcoin is Bitcoin. It's not a risk asset. It's not a tech stock. It's not gold. It's uncorrelated. It offers idiosyncratic risk in your portfolio. I just love that pitch. And so every time I mention digital gold, people say, well, why isn't it acting as a safe haven when gold goes up? I hate that.
I get it. Yeah, I hear you. Look, yeah, in terms of, I mean, the reason is that we're trying to put the ocean into a swimming pool. I mean, and that's why it's so volatile, right? I mean, it just, it's going to take a lot of time and a lot of adoption. It's got to be much more widely spread as the underlying base layer of money. And for that to occur, I mean, there's plenty of it available. It just is not at today's price. And so that's why we get these enormous swings. I always like the Mermican-Weimar chart that shows, when a monetary system is changing, just how rapid and volatile the swings can be. And that's Bitcoin to a T, no doubt.
And how does that apply to the United States monetary system with that same thinking? Because, Bitcoiners love to point to the fact that the dollar will eventually hyperinflate or collapse. I think they, again, believe that'll happen at a much shorter timeline that is likely if it does happen. But are there signs, would you say, in legacy financial systems that we really could see a collapse or crash of the actual system that we have now?
I believe there are. I mean, look, I thought we were going to collapse in 2008. I thought we were going to collapse in 2000. I thought we were going to collapse in 87. I mean, it's these things take long periods of time. You look at, reserve currencies and how they lose their position. I mean, it takes decades, and we're only a few decades into this one. So it may be a few more decades until it occurs. But as you're well aware, as all your listeners are well aware, the fiscal dominance, the way that the government is spending, the way the debt is growing. I mean, 11 trillion in debt in 4 years. I mean, it took 200 and some odd years to get the first 11 trillion, right? I mean, it's just, these things are compounding, and anyone who plays with compound functions understands that eventually the line kind of goes straight up, and we've had, a couple of crises recently. We had 2008 and we had COVID. As Lynn's charts and books point out so nicely, they just have to keep creating money. I mean, this is a system based on creditism, and they have a choice that they've either got to inflate or die. And if they don't continue to inflate and debase the debase the value of the money, then the system collapses on itself because all that debt that we've created, can't be serviced. So, and it appears to me like it's happening faster, that the cycles are getting faster, the amounts are getting bigger, et cetera. Now, one can debate a lot what that means. Does that mean, we go to hyper Bitcoinization in the 30s? I think that's pretty possible, actually. But I don't think it's possible next year. I mean, right. I mean, right. I mean, it's there are probably several more swings, up and down in this inflation, deflation, boom bust cycle that we have. I mean, I would fully expect the price of Bitcoin will be over 100, end of this year, and a couple hundred a year or two out. But then, of course, they might try and do something to fix the monetary system, and it might correct. It just, that's the nature of the game. And by the way, the people who are running the system, they're really good. They know how to change the rules. They know how to, they they know how to keep us on our toes, and they will do things to keep their system alive because they obviously all benefit from it. I mean, a perfect example was '08. They started paying interest on excess reserves, and that's what prevented all that money they printed from going out into the system and creating inflation. I mean, there were a lot of us in '08 who thought, okay, this is it. We're going to have hyperinflation right here, right now. Well, no, they cooked up something to prevent that from happening. So, they will continue to, try to preserve their system, and they will probably be somewhat successful, but I think they're fighting a losing battle. I mean, I often joke that I think Jay Powell is playing a losing hand. That's my view.
I think Jay Powell doesn't care. He's playing a losing hand as long as it doesn't lose before he gets
I think that's absolutely right.
removed from office.
He cannot wait until May 2026 is my sense. If and he's probably every day he's probably saying to his wife, "Why the hell did I take that second term? This is ridiculous."
Right. He could be done. He could be done in November, depending on the results of the election.
Well, that's possible.
Yeah.
I don't think that politically, I don't think that anybody can really fire him though. I think unless, I mean, now he could step down at any time he wants, I suppose, but I don't think he wants to do that because it's embarrassing.
Yeah.
So my gut is he's going to try and leg it out until May of 2026, which is when his term ends.
Yeah. I think what's been most impressive to me, talk about it with my guests all the time, is something you alluded to, which is the amount of levers and buttons that they can pull and push that we don't know about. Because when you see the top line numbers, when you see what's happening, you assume this is unsustainable. The debt spiral that you alluded to, it feels like there's no way that can be corrected. It's sort of like the Great Recession of 2023 and 2024 that everyone was predicting, or the rate cuts we were going to get for 18 months that predicted, and they just never happened.
They've got an exchange stabilization funds. It's multiple billions of dollars. I mean, I think it's $400 or $500 billion that they can use to monkey around with markets. They've got other central banks. I mean, Japan is obviously intervening in their markets because right now it's kind of the crisis sort of situation. And I'm sure the Fed is providing with swap lines. And in turn, I'm sure that, the Japanese are being asked to buy the US government securities. I mean, there is a lot that they can do to manipulate these markets. I mean, I don't think any of these markets truly, quote unquote, represent free markets. They're markets that are the best that we've got in light of the circumstances, right?
I literally refer to Bitcoin as the last existing free market.
I think that's probably right. I think that's exactly right.
Which is interesting because people complain Bitcoin is manipulated, that whales push the price around up and down, which is, by the way, the definition of a free market. It's still free. It may suck that somebody has a lot more money to operate in that free market than you do, but it's a free market. There's no buyer of last resort coming in to bail out, creditors.
Correct. The one thing that might make it a little less free than we would like, and that I do worry about, and I've mentioned it in the past, people have asked me the question is, can they manipulate it? I mean, and to the degree that there are futures and options around it, those things can start to kind of push it around a bit. And, the good news is, I mean, the amount of gold futures and options and the BIS and all the other countries and the Cayman Islands stuff that they used, to bomb it in 2013. I mean, those things don't exist. I mean, they've had a lot of time to figure out how to manipulate gold. They've really done it, and they've done a really good job of it. Robert Rubin was an old gold trader at J. Aron when he was at Goldman Sachs, and so they've got gold in a box. They haven't had as much time to figure out how to manipulate Bitcoin. And by the way, if they do manipulate it, they're going to get their face ripped off. I mean, gold has never gone up 5x in 9 months, right? whereas Bitcoin has. So. But there are, as long as there are derivatives, I mean, in my view, derivatives should be outlawed because what they do is they basically make the person with the biggest purse, in charge of setting the marginal price. In other words, if you're, I mean, and guess what? When you own the printing press, you by definition have more money than anybody else because you can print it. And I'm pretty sure that they take losses off balance sheet and that I'm pretty sure based on kind of national security that there are all kinds of things that they do to keep these markets where they want them to be. And that, yes, over long periods of time, the underlying trends that you and I see do have to appear because they can't hold things, they can't stand against the tide forever. But boy, at critical moments, I mean, you can just see their fingers coming in to change shit,
I mean, Silicon Valley Bank was the
perfect
best example, right? I mean, literally, I guess it was the threat of the bazooka that really did it, not the bazooka itself.
Correct.
But coming in and saying, no matter what happens, we got your back. was a pretty astounding moment.
Right. I mean, Janet basically said, if need be, we will guarantee every single deposit in this country, which is $17 trillion, by the way. I mean, it's just, and so, I mean, the thing, I think the thing that everybody is thinking is, look, this is a big, powerful government, and you're nuts to bet against it. And, there's certainly that has been true for a long period of time. But as we all have seen, their power is fading. I mean, just a perfect recent example is kind of the Biden case, right? Where we all knew he was, senile and out of it. And, they've maintained he wasn't until it just then became so glaringly obvious that they had to do something. But, and that's, I think, I think it's similar. I mean, it's different, but similar in the way that, I mean, look, even Jay Powell said this fiscal situation we're in is not sustainable. I mean, he cited Stein's law. I mean,
on 60 Minutes.
Yeah, right. This is the head of the Federal Reserve, right? I mean, good God, man. Okay, fine. So, two questions then, Jay. Why are you enabling it? Because your policies do enable it. And two, how the hell are we, what's the future? How the hell are we going to get out of it? Because the system is built in a way that absolutely requires that. And so if he's saying it, and it means everybody's aware of it. And so it just becomes a matter of time until the little boy goes, the guy's naked, and then, eventually everybody exits, right? I mean, it's, that's what I think is coming.
You have to wonder why he had the willingness to say that.
I thought it was stunning.
Moment.
I was really surprised. It wasn't on my bingo card, right?
No, I mean, I spoke with Lynn, who you referred to obviously before on this podcast a few weeks ago, not specifically about that, but about sort of the decreasing importance of the Fed. It seems like it's more of a media narrative and a market narrative that people stare at Jay Powell and see how he's going to cough or sniff or sneeze and what tone he's going to use. But it's fiscal dominance that's the story, and not, and not monetary policy. So right now, everybody has their eyes on rates up, rates down, 25 bips, 50 bips, but none of that matters when the Treasury is effectively adding $1 trillion to the debt every 90 days. It's misdirection.
Absolutely. I mean, it doesn't matter as long as the bond market stays quiet and as long as they've got the internal plumbing to get the swaps and the money around to keep it all quiet. I mean, I think, the three, I mean, I watched 3 or 4 different things, obviously, just as highlights. I watched the stock market, which is just on a tear. I watched, the bond market. I watched the price of gold, and I watched the price of Bitcoin, because I think all three, they're all tied together. And right now the bond market's rallying because everyone thinks, okay, we've got a recession coming, and therefore, what do? You buy long bonds, and that's what you always do in a recession. But I don't know how long that's going to last, because I think that we're running these huge deficits, and this is pre-recession. If you take the, Groman's done great work on this. If you take the math of how much, expenses went up and revenues went down in the 2008 case or in the 2000 case, I mean, you think the deficit's big now. Wait, if we really have an economic downturn, wow, it's going to get even bigger. And so, the thing that I think most people haven't gotten their arms around is that this, we are behaving like a third world country. I mean, these monetary steps and these policies that we're following, it's not as though no one has ever done this before. I mean, we've got 50 or 100 examples of this occurring over the last couple hundred years, right? With other countries that are smaller. Now, no reserve currency country has done this in the past couple hundred years. I mean, I suppose Rome did it, with the denarius, but, it was a couple thousand years ago. So, so we don't know exactly how it's going to play out with a reserve currency behaving like a third world country, but guess what? I think we're about to find out, right? It's coming.
Well, the end of Rome, many would argue, was when they started to dilute their coins.
Well, that's exactly right. It corresponded almost perfectly. Yeah, the denarius started off 100% silver, and by the end, it was basically tin and lead and steel. There was no silver content left, and Rome fell.
And the soldiers said, you're going to need to pay us more of this, which meant they had to make more coins, which eventually meant there was no army to defend Rome. And that was the story that people don't seem to realize.
Yeah, exactly. I mean, it really is the case that in this kind of a climate, reading history books is actually more relevant than reading, kind of investment books of the past 10, 15 years. I mean, and I feel sorry for, a lot of young people who've never really seen a bear market. I mean, if you got into this business after 2008, all is buy the dip. And,
Up only.
yeah, it's up and to the right, everything, literally everything. And that's because we've got the pedal to the metal on the monetary side, just creating more monetary units. And so, yeah, the stock market can continue to rally, but, in real terms, if inflation adjusted, doesn't look nearly as good.
I mean, you talked about the boom and bust cycles that have
Yeah.
existed, certainly since fiat money has existed. It means that a recession or depression, even if it's a shallow recession, is inevitable. You have to eventually have a recession if you have these ripping markets like they do. So let's assume that we finally get this recession that everybody's been predicting for all of these years, but that you're right about long bonds. This time is different. This is not the time you want to jump into long bonds because of fiscal policy. How would you generally be approaching an upcoming recession or worse?
So let's say we get the recession. I mean, first off, there's a possibility that we just go right into a total crack up boom. Do you know what I mean? That they, right? David Hunter. I used to think he's nuts, but he was calling for 7,000 on the S&P, and he may be right. I mean, who knows, right? If they go back to ZERP, if they go back to QE, they're going to light the candle again, and stocks are going to go higher, right? But eventually, you're right. At some point, things will break, and we will probably have some kind of a recession. And the way I think about it is, the government will be forced to accommodate and print, because the alternative is the Great Depression or something truly worse. And I think that at that point in time, it will become obvious enough to people what they're doing. I mean, with each of these cycles, they've printed more and they've been more aggressive. I mean, the last one they tested the whole stimmy thing where, and so, in the next one, UBI could become a thing, right? Where everybody below a certain income level. I mean, and frankly, they have to do it because, otherwise, the torches and pitchforks are going to show up at the billionaires' houses. I mean, you've got, the book I'm writing, I've got a chart in there. It's one of my favorite charts. It's off the Fred site, and it shows the wealth held by the top 1%, and then as opposed to the wealth held by the bottom 50%. And, it's stunning, right?
That's the hockey stick.
The top 1% owns all the wealth. I mean, the bottom 50% owns 1/10 of the amount, less than 1/10 of the amount that the top group holds. So, that's French Revolution kind of stuff. And my guess is the way they'll try and deal with it, the Democrats, if they win, would try and deal with it is, one, very high taxation at the top, and then two, UBI and stimmies at the bottom, right, to keep people from revolting. Because, and of course, that'll only make the problem worse in terms of the monetary debasement side. So to me, it's a very, from an investment point of view, I say to all my potential investors, look, the only thing, I mean, what you want to do is you want to own things the government can't print, because the government's going to have to print a lot. And so the two best things to own in that category are Bitcoin and then gold and silver. Real estate's kind of a distant second because, they can tax it and you can't really move it, and, so on. So, and I also say that the only way I'm wrong is if the government gets incredibly responsible, and they laugh about that, but, but it's possible. I mean, so if they said, well, we're going to means test Social Security, we're going to close all these bases, we're going to stop these wars, we're going to cut back all this expense, there's not going to be any more unemployment insurance or welfare, et cetera. We're going to cut food stamps, et cetera. And by the way, all of which would be hugely recessionary and would create an enormous amount of pain. And they said, and we are going to balance the budget. Well, in that case, what you and I are discussing, which is basically investing in sound money, wouldn't be as good an idea, because the dollar would actually become sound again, because the people managing it would actually be, responsible. But when I say that to potential investors, they all laugh, as do I, because what are the odds in the current situation that occurs?
Well,
it's going the other way.
Nobody gets elected on austerity as their platform.
Exactly. That's exactly right. And you can just see it. I mean, I don't know how this election is going to go, but I fear that Harris will win. And you can already see she's teeing up all these different things, and it's only going to get worse. In fact, I just tweeted this morning, I think the price of gold is actually reflecting to the odds of the election going in the wrong direction. I think people are saying, okay, she's going to win, and that's not good. And for monetary stability, I'm going to buy some gold.
It's interesting. You talk about responsible government where they cut all the entitlement programs and balance the budget and spending, but in a debt spiral, that would still be a drop in the bucket. If we're already at over $1 trillion on debt service, and by the time those things would happen, you're talking about 2, maybe 3 trillion on the debt service. There is no way to grow through that, correct?
You're right.
Unless I'm missing something.
It really, I mean, I do sadly, you know, it was the saying across the Rubicon. I mean, I think we're at the point where it's hard to go back. You can't go back, and it's a mess. And so my view is, you know, rather than run it to its natural end state, which is failure of the currency and hyperinflation, that what they ought to try to do at some point is have a monetary conference wherein the dollar is massively devalued against a real, you know, limited asset. And Bitcoin would be my first choice. Gold would be my second. And, you know, we try to go forward on a more responsible basis with, you know, with a limit and a cap on the money printing. And of course, that would create enormous pain too. I mean, there's really no way out of this without pain, Scott, because, you know, I mean, what we've done is we've had a big party, we've had a big keg party, and we're all drunk. And, you know, the net effect is, you know, we got to sober up, and you know, we're gonna have a hangover. I mean, that's just the way it works.
Yeah, I think the problem is
debt is pulling consumption forward, and you know, we've got to cut back and balance things out and get things to be more stable. And it's going to be super, super painful. But here's the positive news in my view, because I've read about all the history of all these other countries that have gone through it. You know, and even countries like Ecuador, which recently had a hyperinflation, I think it was 2000. And then they switched and they went to the dollar standard, and now it's actually a stable place. I mean, not that the dollar's great, but it was a lot better than it was better than their own currency. And so the point is, you know, if and when we do go to a sound money standard, the adjustment process is quite painful, but at least the future's bright, because then you're doing it correctly, you know. And so we got to get back to doing it correctly, because that's what will give our kids and you know, someday my grandkids, you know, a better world to live in, not the way we're doing it right now, because, you know, it's just things are a mess, as we all can see.
Yeah, I think the lessons of history are extremely important, but there's also nuance, right? It's different this time because the global economy is so intertwined.
Yeah, absolutely.
The dollar failing now isn't just, even being the reserve currency, it's not just pain for Americans, it's pain for everyone, everywhere at the same time. Absolutely.
But you know, to the credit of the countries that aren't the United States, I mean, they're kind of saying to themselves, okay, you guys have messed this up pretty good.
Yeah.
We're going to try and do this differently. We're going to actually trade with each other in our own currencies and net settle in gold. You know, I mean, the big mistake they made at Bretton Woods was to make the dollar the reserve currency, because it became, you know, Triffin's dilemma came into play. And, you know, as a result, you know, we had to hollow out our manufacturing base, all the other things that have happened. I mean, the world needs a neutral reserve currency, full stop. I mean, you just have to have one. And, you know, gold used to be it. I think Bitcoin will be a better choice. But, you know, frankly, I mean, as I've talked about with many Bitcoiners, the odds are good that these governments are going to try, you know, if they come to the realization that this debt-based system is broken and they have to fix it, I'm guessing they're going to try and fix it with gold first, just because of the tradition and the history and so on and so forth, which I think is an enormous mistake, because India and China own a shitload more gold than we do.
They'll do it with gold, or they'll create something.
Well,
that would be my bigger fear, is that a knockoff Bitcoin.
Well, you're right. Well, that's the CBDC. That's the $1 trillion coin. You're right. They could try and create some other kind of money. But having said that, you know, especially if we go all the way through to hyperinflation, it's going to be kind of like, who's going to believe them? Who's going to trust them? You know, I mean, that's the one thing. That's the other thing that I think, and I read about this in my book, that I'm very positive about, is that, you know, their castle is leaking and crumbling and falling apart. I mean, you know, look at what, you know, things like this broadcast, things like, you know, Tucker Carlson, things like Joe Rogan. I mean, you know, everybody knows they're being lied to. And, you know, the technology, thank God for the internet, right? Thank God for the ability to, you know, have those people who want to search out the truth be able to do it. And that group is growing more and more. And you know, the New York Times doesn't control the narrative anymore. You know, they're a joke. And, you know, MSNBC does not control the narrative anymore. And so, you know, that's a very good thing. And then so we got this tool called the internet, which basically opens up information and allows us all to reorganize in a different fashion. And now we've got money that goes along with it. Same story. Can't be messed with by the government. So the combination of the two was incredibly positive for humanity, in my opinion. Incredibly positive. The negative is, we can't get from here to there without, going through some serious transition pain, in my opinion. You probably
Yeah, I
agree.
mean, yeah, I 100% agree. I'm not a huge fan of Taleb anymore with his newfound opinions on Bitcoin, but the idea that he talks about often about, clearing the brush to prevent the bigger fire is one that
Yeah,
our government clearly has not adopted. And those
no,
levers and buttons we were talking about before are just, adding seed and water to the brush rather than
no. I mean,
clearing it
yeah,
out.
and I mean, look, these people have been in power, just been in power way too long, and have just, have really mucked it up good. I mean, how do we spend $8 trillion in the Middle East? I mean, on wars. I mean, it's just. Think about that. Think about how that money could have been more productively used. And it started way before that. I mean, when I was a teenager, we did it in Vietnam. We murdered a bunch of, Vietnamese rice farmers. I mean, it's just, I mean, it's sad because the United States, in my opinion, while not perfect and with some real stains in its past, was generally speaking, I think, a pretty moral country, post World War II. And the CIA and a lot of the large and controlling organizations started to kind of shape it in a fashion that benefited them, and it didn't necessarily help the citizens. you know
No, it never does. You talked about obviously the election, and not to get particularly political, but you sort of laid out a vision for your biggest fear if Harris wins. Both parties, I think, have lost the ability to claim fiscal responsibility, not playing
True.
politics, just looking at it objectively. I think Trump did have COVID, which is part of it, but effectively added 7 something trillion to the debt in his
Oh,
4 years.
absolutely.
Biden will probably be 7, 8 trillion to the debt in their 4 years. So, and with the debt service that we talked about, with interest rates being what they are, can either party is either party really
No,
better at this point?
no.
I mean, I guess it's a lesser
Well,
of two evils
from
situation
from a
financially.
fiscal and
Yeah.
standpoint, probably the Dems are worse than Republicans, but they're both bad. And let me make it clear. I mean, I condemn them both as being part of the uniparty. I mean, I think that I think Trump is better than Harris, but honestly, I think RFK is better than Trump. But I don't think RFK has a prayer of winning, so we're kind of faced with the other two. And my sense is RFK might end up being kind of Perot to Trump, where he's going to grab a fair share of the votes. And then actually, I heard something this morning I thought was pretty interesting, which is a statistic said that since Trump won, the time when Trump won, 20 million boomers have passed, and between 30 and 40 million Gen Zers have gotten the vote. And so, I'm guessing a fair number of those boomers who passed would have been Trump voters. And I'm guessing a fair number of those Gen Zers who got the vote are more likely to lean liberal than Harris. So, sadly, from my point, there are things about both parties I don't like. So I try to avoid being political because my issue really is sound money. And neither
Yeah.
side really understands sound money. I mean, the only person I think begins to understand sound money, and by the way, he's not perfect either. I mean, no politician is, but if I look at kind of the three candidates that are kind of in the list, I mean, RFK clearly to me with his speech in Nashville demonstrated to me that he understands this better than most people.
He
Um,
understands it and he has skin in the game. So I'm a huge RFK fan. I actually interviewed him 2 days before his speech.
oh, did you really? Fantastic.
Yeah, I flew to Nashville a day before the conference. We did an interview, and I've spent quite a bit of time now in a room with him, and I
Right.
haven't personally seen what I see on the media. It's a different conversation, but he seems very pragmatic, well educated, well thought out, whether you agree with them or not. But interestingly, he said, I have a material percentage of my net worth in Bitcoin. And we can all
Right.
talk about the narratives and what politicians will or won't do for the asset. I think it's kind of nonsensical because Bitcoin was created so we didn't need to listen to what politicians said
I
about
think
it.
that's right.
But at
Yeah.
least the guy owns it, and a lot of it.
Yeah. And yeah, and he's thoughtful. I mean, he's thoughtful, and I think he understands. I think he understands the problem. And I think, look, to me, Harris represents, the deep state, the state as it exists, the status quo, all of it. I mean, she's just more of the same. It'd be like having Hillary Clinton or something as president. At least Trump talks about attacking that stuff, but his ability to attack it is not perfect. and he's got a lot of baggage that he brings along with him. I think RFK is the closest to, a good politician that we have, and therefore, that's who I'll vote for. That's who I support. But it's, I mean, I'd like to, yeah, like you, I'd like to get to the point where this stuff doesn't really matter. And that's how it should be, actually. I mean, the government has just grown so large and so out of control. And yeah, I mean, I'd like to have law and order, and I'd like to have a good system of courts and justice, and that's kind of about it, you know. And all the other stuff the government does, well, they can stop doing that as far as I'm concerned.
Yeah, I think most Bitcoiners would largely agree with that. I want to go back to something we were talking about earlier, because I think it's
Sure.
very interesting, which is we were talking about the derivatives market and options
Yeah.
and sort of how that's been used to manipulate different markets. We had an amazing conversation one day on my Monday show with you, where Mike
Yeah.
McGlone said that gold was not manipulated,
Oh,
and
yeah.
you went ballistic. And maybe we can revisit that in a second. But now we have Bitcoin spot ETFs. Right?
Yeah.
We have the futures ETF, and the day the futures ETF launched was the dead top of that cycle. Literally, like the $20,000 all-time high came the day that before everybody could short it. And now, likely, we're going to eventually get derivatives, options, and basically every product we have for other assets on these ETFs, at least. Likely not on spot Bitcoin. We've cheered this institutional adoption, right? Everybody loves hearing Larry Fink on his roadshow talking about Bitcoin. But should we maybe be a little more skeptical of the intentions, or even if the intentions are good, what might likely happen when we end up fully financializing Bitcoin?
Yeah, I think it's a great question, Scott, and I think about it quite a bit. And you know, as I say, I personally think we should outlaw all derivatives. I think that derivatives in of themselves are a financial menace, as Buffett said, they're kind of, weapons of financial mass destruction. I mean, just being able to create the kind of leverage that derivatives give you gets you into the too big to fail kind of condition, which then forces the government to print money. I mean, that's kind of been the history of the derivative market. And I think that to the degree these things grow up around Bitcoin, I think that's a problem too. And I do think that, the government could get involved in the derivatives around Bitcoin, and they could try to neutralize it. I don't see any evidence of that. I can't say that's happening. I've been watching the amount of, futures, options, the volumes, the size. They're not compared to gold, where there's enormous volumes on it. The amount of volume compared to the underlying Bitcoin outstanding and the underlying amount of Bitcoin traded, it's trivial. So I don't think it's happening yet. And maybe it won't happen. I mean, as I said earlier, with an asset that can go up 2 or 3x in 90 days, or the people who do it, they surely better have that printer ready to go, because if they don't, they could really find themselves underwater quickly. So yeah, it's an issue. I mean, it's something to keep an eye on. It's something, and I hope that when Bitcoiners run the world, and I believe that someday Bitcoiners will run the world, that they will, we will ban derivatives, just outright ban them. They won't be allowed, because I think that free markets are free and fair markets are based upon people having skin in the game, and that kind of leverage just distorts these markets.
Yeah, the boom and bust cycles are a lot easier with those products, as you said, because they add so much leverage, and people are able to get extremely creative, I guess, to state it kindly. There was a time when you didn't have to be a financial professional just to beat inflation. And that's when that's when the world's money actually stored value, right? If your money was based on gold and gold went up slightly, you didn't have to figure out how to survive. You have to literally have like 5 advanced degrees now just to keep your money at a net zero.
That's exactly right. I mean, that's the tragedy of it all. I mean, Bernanke brought in ZIRP in 2008. I mean, people say, well, that's great, it saved the financial system, and all the bankers got 20 billion in bonuses. But take an example, and I know some of these people. They're in my family, extended family, that that had, say, $500,000 or $1 million of savings after an entire career of work. I mean, 40 years or 50 years of hard work, and they saved $1 million. They had it in a CD. And the CD was paying them 60 grand, and they got, 18 grand from Social Security, and their house was paid for. And Hey, guess what? They were fine. They could pay
They
for
could
the
live.
bills and they were
Yeah.
just doing fine. 2009 rolls around, 0% interest rates. That CD income just went to zero. And if they're 70, 75 years old, what are they going to do? Right? I mean, it's just, right? And what are you going to do? And so, yeah, the system it's been incredibly cruel and unfair to people all over the place. And, that's just wrong. I mean, we got to fix it. 0% interest rates were a crime. They are a crime. That's what created quintillionaires.
You think we
So,
end up there again?
oh yeah. I mean, I do. Because I think, look, as we've seen with Draghi or, Silicon Valley Bank. I mean, Silicon Valley was a small brush fire they put out easily, but and I don't know if it happens in a year or if it happens in 4 years, Scott. I just don't know the time frame on it. But I think yes, the math is relentless. I've said this many, many times. The math is relentless. Just compound the expenses. The GDP is not growing as fast as the debt. I mean, there's going to come a time where if they don't take interest rates down to zero and resume QE, that whole debt structure is going to collapse. And I can't tell you if that time is tomorrow or if it's 6 months or a year and a half, 2 years. I don't think it's much more than that, but I think it's coming. So yeah, we will see ZERP again, in my opinion. We will probably see yield curve control, and it will all be sold in the way it's been sold and packaged in the past, which is it's national security. You don't want the ATMs to stop working. Yes, some people got hurt, but this is the right thing that we've got to do to keep the society going. Yeah, this inflation's tough, but it was high inflation in World War II too, and you gotta pull together for the benefit of the country. We got to suffer through it. Blah 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 blah. I mean, you can just see the narrative, and I mean, I don't know. I'm not sure what's going to trigger it. I don't know if they're going to try and use a triggering event like a war. I mean, there's certain, factions that seem to want to be sure to get us into one of those. There are others that are thinking maybe monkeypox is going to be, threatening to us. I mean, who knows? But, even without any of those things, there will come a time when there will be an overwhelming amount of financial distress. And we know that the people who run the system how they will address that. They will turn on the printer. They always have, they have to. The alternative, as bad, and that will create inflation. And as bad as that will be in their mind, and probably somewhat true, that will be
Better
less
than a
bad than watching the
depression.
whole thing. Yeah, than watching the
Yeah.
whole thing implode.
Yeah.
You know,
You talked
so
about yield curve controls, which I agree are inevitable. It's just us turning Japanese, right? But I mean,
correct.
Japan managed to do that for a very long time, but they weren't the global reserve.
That's correct. And they were a nation of savers, and they ran a trade surplus, right? I mean, we're running an enormous trade deficit, enormous. I mean, we've lived off the entire world. I mean, the net negative investment position in the United States is huge. I mean, we've been consuming the world's savings, and the world's been willing to do it. But my sense is, since we grabbed the Russian assets, that's their willingness to do it has gone down substantially. And so we're starting to see a change. The clue is, gold's at an all-time high, 2,500. Bitcoin's close to an all-time high. Not that one, but it's very close within spitting range. And I've often said, gold tends to move first, then Bitcoin follows and follows much harder and further. And I think that'll be the pattern this time as well. And it feels to me like something's brewing. I mean, unless they can keep the stock market going up, which creates a wealth effect and keeps the economy going, things are going to start to break soon. I mean, we're already seeing breakage in CRE, commercial real estate. I think that'll get worse. In fact, and then we saw the duration breakage, which is what hurt Silicon Valley Bank. There'll probably be a few more of those. So, it's impossible to know. I mean, I didn't think Japan was going to be the linchpin, but we saw a couple weeks ago that it is, and everyone says it's back under control. Well, I'm not so sure. I mean, obviously, they probably, like I said, they've done swap lines that they want us to think it's all back under control, and maybe it is for a while, but something else will pop
Yeah.
up.
I think the question with the carry trade that everyone's talking about, obviously, on the yen is it takes a long time to know who imploded.
Exactly.
Right? I get that most of it may have unwound, but if some major institution in some way is currently in the backlog and bankrupt, right?
In my opinion, there's some really big losses that we haven't heard about yet, and those are coming. But in turn, I mean, like I say, I mean, hell, Ken Griffin was BK in March of 2020. This is why he has Bernanke on his board of directors or advisors or whatever, so he could make the call and get a swap line, right? And so, yeah, so let's assume there's some big institution that's in trouble. I'm sure they've been on the phone with Jay Powell. I'm sure Jay Powell sent them the money they need. Keep them alive. They can't, they're at the stage now where anything that's large and systematic, they got to bail it, and they got to do it fast. They got to do it quietly behind the scenes, and they will. They definitely will. That's part of the manipulation that we're so subject to. And what's so ironic is every 1 minute, it's like telling a lie. You tell one lie, then you got to tell another lie to cover the first lie. Then you got to, I mean, it's just they keep getting bigger and bigger and bigger, right? So
I think we both agree, in sound money principles, and that Bitcoin is probably the best thing to own moving forward. I guess the question then becomes, considering the wealth disparity in this country, considering how high credit card debt is and how much people are struggling paycheck to paycheck, how does Bitcoin help the 99% that aren't that top 1%, or certainly the bottom 50%? Are we still at a point where Bitcoin is for everyone?
absolutely. I mean, just anybody with any savings, obviously, this is what you want to save in. But let's hypothetically say you're not even able to save. If we get back to a sound money standard, I mean, forgetting just for a minute that it's a good investment and it's a number go up technology. If we can get back to a sound money standard, the odds of, decreasing wars and decreasing inflation and allowing people to have better real wages and get the benefits of the productivity that Jeff Booth talks about. And we get these enormous productivity enhancements going on. And, we're not seeing any of it because they keep printing more money to dilute our earnings. And so, yes, I mean, even if somebody cannot buy Bitcoin because they can't even save $100, they will benefit from Bitcoin adoption, because if we can move away from a system that's, based on inflation to a system that the money is sound, the society will improve in an enormous number of ways, in my opinion.
I think we all know that the price of assets rising is effectively the denominator, and not the fact that those things are
Exactly.
becoming more
Yeah.
valuable. Just throwing that out there. But that said, Bitcoin does seem to massively outpace that phenomenon.
Oh, absolutely. Yeah, no,
Right.
I mean, I've said this many times. This is the most I've been doing investing for 40 plus years. This is the most asymmetric thing I've ever seen. And what I love about it, I mean, I've always been investing in companies, there's no, I mean, they're core developers, but generally speaking, there's no management team here to F it up. You know what I mean? It's just mathematical code. And unless all the core developers really go rogue on us and screw it up in some way, which I think isn't likely, and I think the nodes would never accept it. It's a very high probability thing. And so, boy, high probability and extremely asymmetric, that's a great combination. I mean, and you don't, I mean, I wrote it in my book, and I'm not trying to be hyperbolic, but for 5,000 years of recorded human history, there's been monetary debasement, okay? Because even on a gold standard, the amount of gold on the planet doubles every 50 years. I mean, that we have above ground because we mine it, right? Well, here you have a monetary medium, a digital asset, as Saylor calls it, that is fixed in amount. I mean, we've just never had that before. And people accepting it as money. And so the notion of true digital scarcity and an asset that, goes up forever, Laura, I mean, it's unique. It's just really, really unique. And so that's why I liked your earlier comment where you said, I don't want to call this digital gold because there's never been anything like that. And I think that really is true. I mean, it'd be like trying to describe, fire to somebody who didn't know what fire was, or airplane flight to somebody, or radio or TV or what, I mean, it's new. It's just a completely new technical development. And and that's why I think that's why some people hate it. They're scared of it. And we're all trying to kind of wrap our arms around, what does this mean? The notion that you got a thing that, doesn't respond to price. There's no more of it if price goes up. There's the same amount. Like, whoa, never had something like that before. What is it?
Yeah.
And so, but I think on balance, it's quite positive, because I think the monetary debasement thing has been going on for thousands and thousands of years. And by stopping it, that to me that's a big benefit for mankind,
Well, with all of that in mind, how high do you think Bitcoin can go? And listen, It's in dollar value. So that was where I was leading with that's where I was leading with the denominator, because the real world is when,
Yeah, well, eventually the dollar value won't matter. I mean, I think my kids and certainly their kids will price things in Satoshis. So a car will be X number of Satoshis and the gasoline will be Y Satoshis. So, that's what I'm describing hyper Bitcoinization, obviously. But I mean, I actually, and I know some people are going to get angry at me for this, but I actually think the power law is a pretty decent model. I mean, we could break it to the upside, but 15 years or close to 15 years of because the price data in the early years was kind of spotty, roughly 97% correlation. I mean, that you can't ignore that. And so, we go to hundreds of thousands, and then we go to 1 million, and then we go to 5 million, and then we go to 10 million. I mean, and I'm talking decades here, not tomorrow, but decades as this better form of money becomes more widely adopted. And I think that's where, I'm out there doing podcasts, we're all advocating for Bitcoin, but honestly, I don't think, I mean, even if we didn't do all this stuff, I think it would happen anyway, just because it's a better choice.
Right.
Now I think we're all doing it because we want to see it happen faster. I know I'm doing it because I want to see it happen faster because I want my kids to benefit from it. And I think the faster it happens, the better off the world will be. But and my view is it's going to happen either way because it's a better choice.
I want it to happen faster, but I don't want it to happen too fast.
Well, that's a fair point.
Because $1 million Bitcoin next year, I don't want to know what circumstances we're living under for that to happen. I'm agreeing with you. I'm just saying I love, it's one thing to say, hey, my Bitcoin will be worth millions, but it's another thing to say that I have to live in a dystopian Mad Max future for that to happen.
Nobody wants that. And I think if it just kind of continues to trend up and more people become aware of it, we can make a transition to it. And we never have to go Mad Max. I think it's impossible. It is impossible to transition into a sound money system. Again, there will be pain though. I mean, there'll be losers and winners and so on and so forth. But as I say, I'm writing a book. It's going to be out by the end of the year, hopefully. And I do deal with a lot of these issues. So I hope you guys will take a look at it when I get done with it.
Yeah, I mean, as we wrap here, so where can people follow you? And then just give us the 30-second pitch on the book.
I make a ton of racket on Twitter, just under my name, at Lawrence Lepard. And I'm not very friendly with the central bankers, who I really have a lot of disgust for. And then I have a website called Equity Management Associates. EMA2 is the address. Edward Mark Alpha, the number 2.com. And I have quarterly newsletters there. My partner and I write, just talking about macro issues. They're all free. You can sign up for free. We won't spam you. So I've been doing investing for my whole career pretty much. And so, I look at these problems as an investor would look at the problems. But as you and I've discussed, it's just not all about money. Number goes up. I mean, you look at a guy like Alex Gladstein, what he's doing in terms of helping people in third world countries. You know what I mean? I mean, this is going to make the world a better place in every single respect. And
if it was only about number going up, we'd all have a selling plan.
Exactly. That's right. Well, that's right. And
so yeah,
it's a lot. It's just a lot. Once you get further into it, you realize it's just a lot more than that. I mean, if we can defund these governments as an example and stop these stupid wars, I mean, why are we killing each other? It just makes no sense. So.
Yeah, and it's all fueled by money printing. We're going to do this again. I know we're out of time, but you just touched on my favorite topic, which is central bankers. I really want to start putting more content out there that explains to people exactly the structure of what that is, where the incentives are aligned, and just how corrupt and broken of a system that is, because I think people have no idea.
Yeah, if that's the case, you're going to love my book, because I'm telling you, I'm naming names. I'm Janet Yellen's 7 million, Real Housewives of Wall Street. I mean, remember John Mack's wife borrowed money under the TALF in 2008? She borrowed like $200 million non-recourse, right? I mean, nice. So some people haven't been around this space all that long. I have. And I remember the Keating Five. I mean, it goes back years. LTCM, there's so many instances of just corruption, just blatant financial corruption. And the book lays them all out. And the idea of the book is I want the average citizen to read it and get pissed off and go, God, this is really broken. I want to vote for people who are going to fix this, right?
I 100% agree. So then we're going to at least commit to, we'll do a book release podcast.
Yeah, great. Yeah, sounds great. It'll probably be year-endish time frame. Yeah, I'd
Perfect.
love to do
Yeah.
that. And I really enjoyed talking to you, Scott.
Can't wait to do it. Can't wait to read it. Lawrence, thank you so much for your time. I appreciate it. I'm glad we
Oh,
finally
thank you.
got to do this. Look forward to doing it more in the future. Thanks.
Thanks.